Okay, hello everyone. It's William DeBoyk here again to do part 3 of what is Forex here for pipjunkies.com. Now, in the previous video, we spoke about what exactly it is that is being traded. Now, I mentioned that 99% of people here, and that will be the case, are going to be trading the spot market, which basically means that we're going to be trading one currency versus the value of another. So that's what I'm here to hopefully talk about today and hopefully help with in these videos. Now, as far as currencies are concerned, they're trading in different pairs. Now, that'd be one currency against another. So, the British pound against the American dollar, the euro against the yen, the dollar against the yen, whatever it may be, it doesn't really matter. Now, one thing that I think is worthwhile for people to know is that these are typically categorized into groups. So people will refer to them as different categories. Now, that's what we're going to be talking about today. And the biggest group and the main group, and this is the group that a majority of people focus on, and especially to anyone who's starting out new, will typically be focusing on, and that is the major pairs. Now, the major pairs we've got listed out here. And this is basically describing the majority of the pairs that are traded. So you can see some of the examples we've got there. Now, what classifies a pair as a major? Well, a major pair typically, and there will be some debate about this, but 9 times out of 10 this will be the case. A major pair will be described as a pair that has the US dollar involved in it. Now, US dollar, as we know, I mean, although it may not be the case for much longer, but the US dollar at the moment is the global currency. It's the base currency. Pretty much everything on a global basis is trading in dollars. Gold, silver, oil, whatever it may be, is always trading in dollars. So the dollars, the global currency, the dollar's the base currency, the dollar's the major currency. Okay, so majors typically refers to anything versus the dollar. Okay, so we can see in this case here, a few examples: euro, dollar yen, cable. We've got the dollar against the Swiss franc, dollar CAD, Aussie dollar, New Zealand dollar. So I won't bother going through all of them. We'll keep everything how it is there. And you can take, obviously, pause the video or refer to the notes below if you want to go through this in more detail. Now, the next set of pairs will be referred to as crosses. The next major group of currency pairs is referred to as crosses. Now, crosses are basically considered any major global currency, so majority of the Western world. So you've got European countries, majority of European countries. You've got the UK, Canada. You can see the examples on here: Australia, New Zealand. So they're basically big economies, but not including the dollar, is what a majority of people would refer to as crosses. So in this example here, we've got some euro crosses, so different pairs versus the euro. So if anyone ever says euro cross, you know what they mean by that is they mean a big economy country versus the euro. So Canada, Australia, New Zealand, okay, Switzerland, things like that. Now, there's an example of other crosses. We've also got the yen cross, the Japanese economy obviously being the third biggest in the world, I believe, at the moment. So pretty big economy. We've got a few examples here of yen crosses. Once again, you can either pause the video or refer to the notes below if you want to look at this in more detail. And people also refer to pound crosses, which, you've got any big currency against the pound. So you've got pound Swiss franc, pound Aussie, pound CAD, pound Kiwi in that example there. Now, other crosses we've got here. So there isn't typically groups for it. So unfortunately, there isn't Aussie dollar crosses and things like that. You can call them that, but there isn't typically groups for it. The main ones are the ones we've mentioned. So you've got the euro crosses, the yen crosses, and the pound crosses. But these are other crosses here which are completely valid. Canada against Swiss franc, Australia against New Zealand dollar, etc., etc. So these are all very valid cross-currency pairs. Now, what's the big difference between majors and cross-currency pairs? Now, not really anything, to be honest, but there's a few things that are worth taking a note of. The major pairs, so the ones that we spoke about right at the beginning, they typically have a lower spread. Now, I don't know if we've gone into spread in the videos just yet, but basically what that will allow is it's easier to make profit. In theory, not always the case, but at least in theory, it's easier to make profit. The spread is basically what the broker's going to be charging you. Okay, so that's the broker's fee in a way. Now, the lower the spread, the lower the fee, the easier it is to make money. As I say, at least theoretically, it's not always the case, but as an early understanding, that's a good way of looking at it. cross currencies typically have a fairly low spread as well, but the further along you go, so for example, the I don't know. Let's just say the euro against the pound. Okay, the eurozone obviously has got a huge economy. Pound economy is pretty big as well. If you compare that to say New Zealand and Canada, okay, still big economies, but nowhere near as big as say euro and the pound, then the spread's going to be slightly higher as we go along. Okay, so that's a general rule of thumb. It's not always the case. It will vary from broker to broker, but as a general rule, that's the kind of thing that you need to look out for. Now, there's also something that people will call exotic pairs. Typically, I wouldn't advise people to focus on these too much at the beginning, simply because the spread can easily be 2, 3, 4 times bigger than you would have on the major currency pairs. But exotic pairs, basically, the politically correct term would be any country where they've got an emergent economy. Okay, so South Africa, we've got Hong Kong, Singapore, Thailand, Mexico. These are all countries. You can include like Brazil, India, countries like that where the economy is fairly big, but not as big as some of these Western countries. But they're growing. And Brazil, for example, we wouldn't be too surprised if in 10 years' time they're one of the biggest economies in the world. But that's a different story, I guess. So exotic pairs would basically be any pair against a currency that, against a currency that's in an emerging market. Okay, that's the politically correct terms of politically correct way of saying it. So any currency that's in an emerging market would be classified as a exotic pair. So that pretty much wraps it up for this session. There is going to be a lot more videos on what Forex is, so stay tuned for them. And any questions, please let us know. So until then, take care. Thank you.